What's up, everyone? Welcome to the Be Smart podcast, how not to be an idiot with your money. What are we thinking here, Jared? Are we bullish on Cracker Barrel?
Did you know that a couple years ago, somebody started a petition to change the name to Caucasian Barrel?
Yeah. Well, yeah, that's fitting. People lost their minds over a logo change. I mean, it is kind of like the classic minimalist shift we're seeing with all these restaurants. Kind of boring. They're going to change their restaurants to like all gray.
Yeah, it's very sanitized. I haven't been to Cracker Barrel in 20 years. I don't really have a dog in the fight, but I think it was a mistake.
You don't like their super dry biscuits?
I like gross food. I like chicken fried steak and all that stuff, but
it lost like $100 million in value last week. I saw.
Yeah, the stock was down 13% in a day. Yeah.
Oh my God, that's awful. All right, market headlines o'clock. You ready?
Yep.
Our first one here. The stock rally stutters as rate cut euphoria fades. Contracts on the S&P 500 edge lower after the gauge jumped the most since May on Friday in the wake of Jay Powell's dovish slant at Jackson Hole. Concerns about tariffs and their impact on inflation and corporate profits are back in focus. Traders still see an 80% plus chance of a rate cut next month, which is something we talked about last week. Although that projection seems to be facing some key obstacles this week, namely Nvidia earnings on Wednesday and then PCE on Friday. So let's just unpack Jackson Hole reactions here, starting with stocks. What were your takeaways and how pivotal do you see Nvidia earnings this week for big tech sentiment?
Well, first of all, just for perspective, it's the last week of August. Nobody's around. Nobody cares. Today is Monday. Stocks are unch. You have some decent moves in the dollar and bonds and stuff like that, but stocks are totally unch. Like everybody's on vacation, right? So just to put that in perspective, the Jackson Hole speech itself was not as dovish as the headlines would lead you to believe. I checked out the speech. It's very nuanced. There's a lot of talk about inflation. It's really not that dovish of a speech. And you've seen, like I said, you've seen big retracements today in bonds and the dollar. And also, you mentioned that the rate cut probability is 80%. It was 80% before Jackson Hole, and it's 80% now, and stocks are 2% higher, right? So that I don't understand. And also, a 20% chance of no rate cut is substantial. Like, that's still a decent percentage chance. We have PCE this Friday. We're going to have another payroll report before the Fed meeting. Lots of stuff can happen. I can tell you that if the Fed does not cut in September, Trump is going to turn into a fire elemental. And he will fire Powell if they do not cut rates in September. Like, that will happen.
You think so?
That's what I think. Yeah.
Wow.
Yeah.
Digging into bonds a little bit, Treasury bonds jumped on Friday, widening the gap between short and long-term yields to the most in almost 4 years. Yet there are some lingering doubts about how much rates will come down. What are you seeing with the bond market today after kind of another euphoric moment on Friday?
So we got some steepening on Friday. It wasn't huge, but the curve did steepen a bit. If you own iVol, you probably noticed that iVol was up a little bit. So that reflects the curve steepening. The curve should still continue to steepen. It's been the toughest trade of all time. It hasn't worked in 2 years. I think that, I was looking at there's a screen on Bloomberg called WIRP, WIRP, which is World Interest Rate Projections. And you can see how basically the implied rate for, however many months out, like basically the rate cut probabilities. We have a lot of rate cuts priced in out 2 years. Like, we have 6 rate cuts priced in out till like the summer of 2027, which would take rates to like 3%. It's pretty aggressive, and twos are at 3.7. Like, I kind of have a tough time betting on even more rate cuts without some horrific piece of data or some exogenous something or other happening.
And what happened with the dollar and also gold and silver? They made pretty significant moves, right?
Yeah, so the dollar was down about 1% on Jackson Hole. It's up about 0.5% today. Gold was up about $35 on Friday. Silver was up about 80 or 90 cents. Gold is unched today. Silver is retracing a little bit.
For our next headline, the U.S. government takes a 10% stake in Intel as Trump expands control over the private sector. What do you think here? Is this a dangerous intrusion of government into private enterprise?
Yeah, this is terrible. It's
Yeah,
terrible.
I'm also seeing that Kevin Hassett said that the federal government could take stakes in other U.S. semiconductor companies or even move to other industries. So, what are the repercussions of this? Does this remind you of?
We're kind of becoming like China. We're going to have state-owned enterprises. It's not as if this has never happened before. Like this happened during the financial crisis. So, when we passed TARP, the government took stakes in about 3,000 banks, big and small, and they took stakes in the automakers, except for Ford, Chrysler, and GM. They took stakes in. And everybody remembers GM was Government Motors, and like people were making fun of GM because it was like the state-owned company and stuff. And eventually, these companies paid back what was owed and got the government out of their business, including GM. The government actually made money on the TARP money to the banks, but they lost money on the automakers. That actually cost the taxpayers money. But they made a significant amount of money on the stakes they took in the banks, which were equity stakes and warrants, right? So, I mean, this happened this is less than 20 years ago that this happened, although it was a crisis. And now this doesn't seem like a crisis at all. This seems like this is going to be, business as usual. We're going to be taking equity stakes in companies. Like only bad things can come of this.
I want to get into a couple questions in the mailbag, but is there anything else on markets you want to kind of touch on? I know you said it's the last week of August. By the way, when do people start waking up again?
After Labor Day.
Okay, so we got that coming up. For the first question in the mailbag, I am a long-term investor, currently 71 years old. I have a stock portfolio with a number of the Mag 7 stocks, some of which I have owned for decades. Very small tax basis and large gains, certainly relative to my initial investments. I, like yourself, see some clouds on the horizon. Is there a cost-effective way to protect these positions?
Well, I don't mean to be morbid or anything, but if you're 71 years old, you should not be a long-term investor.
Right. Yeah. Maybe take some of those gains.
I mean, so for somebody in a position like that, it really depends on tax and the tax consequences. I mean, if you can take gains without tax consequences, then please do that, right? Like that is, if they're in a IRA or something like that, like you should for sure take gains. If there are tax consequences and you're 71 years old, then maybe you start thinking about, I don't know what your net worth is or if the estate tax applies to you, but if you pass this down to your children or nieces and nephews or grandchildren, then they get to step up in cost basis and you avoid the tax altogether, right? So those are the kind of things I would be thinking about. Just in terms of the market action, like Palantir looks like a dog now. Like Bitcoin is breaking down. Like look, you could have said this 20 times in the last year. Like, the price action is looking a little sketchy, but I mean, the point is that if you've made 1,000% on these tech stocks, what are you trying to achieve here? You're trying to make another 1,000%. Like, what's the goal? So just take some profits.
This next one's kind of a mouthful. Is it possible that quality emerging small cap companies are opting for employee stock ownership plans or private equity instead of IPOs as an owner exit or growth capital strategy? As the pool of publicly funded small cap companies become a bit of a swamp, could this be a reason folks are not buying?
Short answer, no. I don't think so. I think it really has to do with really big macro reasons why people aren't buying small caps, sentiment reasons. I don't think that's the answer.
Let's look at the week ahead. On Tuesday, consumer confidence for August. Wednesday, as mentioned, Nvidia earnings. Thursday, GDP first revisions and initial jobless claims. And on Friday, PCE. Those are some of the highlights. Anything I'm missing you want to talk about?
Nvidia earnings are going to be interesting. Like I said, everybody's out to lunch. I mean, Nvidia earnings are always interesting. I don't own Nvidia at the moment. In fact, I was short about 6 months ago. So, yeah, I'll be watching.
What about off markets? You got anything going on for Labor Day weekend?
We're gonna have a little pool party. The pool is getting cold.
Yeah.
Because we've had so much rain, it's cooled off the pool. I mean, cold for me is like 82 degrees. That's cold. The water is 82 degrees, and that's chilly. But yeah, it'll be fun. We'll have a little pool party. I honestly need something to do because I should probably work on my book. It was funny because I had a couple of writing professors over to my house over the weekend, and they're like, "Oh, you don't have any free time." I'm like, "Actually, I do have free time because I have a book that I'm not working on, so that frees up a lot of time." So,
right. You got some good college football games this weekend too. You could always check out.
Yeah,
I know you're not a huge fan, but
yeah,
should be interesting. Week 1.
Yep.
All right, I got to go get some Chipotle. I'm starving.
Yes, that sounds terrific.
It sounds so good, right?
Yep.
All right, I'll talk to you here soon. Thank you everyone for tuning in. We'll be back soon. Later.
See ya.